Hi, I'm Jim Jubak, and welcome to my Trend of the Week video. This week's Trend of the Week is Russian fears and US bank stocks. If you remember way back when, before Russia invaded the Ukraine, the idea was that you wanted to own bank stocks because with the Fed raising interest rates, bank stocks would see an increase in their spread, and it would be good for earnings, and this was a good place to be. You bought things like Wells Fargo and Bank of America and JP Morgan and Citigroup. One of the things that has happened since the Russian invasion, however, is that you've started to get a differentiation inside that group depending on people's perception of how much Russia risk there might be. So that Citigroup actually came out a couple of days ago and said, hey, we don't have a whole lot of exposure. It's not going to cost us any more than about 10% of revenue. So anyway, what you're starting to get is a spread between big bank stocks with some Russian exposure, unquantified at this point, and then big bank stocks with little or no Russian exposure. So let's look at two stocks. Okay, this is a chart for Citigroup over the last month. It's not been a great time for bank stocks in general. We've had a lot of backing and forthing about how many times the Fed is going to raise interest rates when the economy is slowing. But over the last month, what you've seen is the stock go down, 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 down. What I'm interested actually in is this part of the chart right here, because this represents what's going on as Russia invades the Ukraine. And you can see that basically we haven't had a rally, and in fact, in the last day or so, we've had a big downturn. Contrast that to USB, US Bancorp, which is they're the fourth largest US bank, but they have almost no exposure outside the United States. And what you see here is the stock, of course, has been down, 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 down on the same grounds, interest rate fears and what the Fed doing and all that. But what we've got here starting on the 1st is we've actually had a recovery. That Jerome Powell, the Fed chair, went out and said, hey, we're going to do 25 basis points of rate increase in March. And people said, oh, that's the kind of reason we own bank stocks. We like that kind of gradualism. And people said, oh, and you know what? They don't have any Russia exposure. So let's go back to March 2nd. It's a day when the S&P was up very, very strongly. So you got Citigroup up 1.66%, JP Morgan up a little over 2%, but USB, US Bancorp, without that Russia fears, went up more than twice as much. It went up 4.46% in that day. We also have, on March 3rd, US Bancorp was actually up on a down day for the S&P, up not a huge amount, but up about 0.8%. So if you want to own bank stocks, and I think you do, you should probably look for those that are not fighting that fear of how much Russian exposure is. I own USB in my jubakpicks portfolio. I own Wells Fargo, or you can just buy a bank stock ETF. Thanks very much for watching. If you like this video, please like it. Please subscribe to my YouTube channel. That way you'll know when we do the next one. We're doing about 3 a week. If you want to see more of my stuff on the internet, you can go to my free site, jubakpicks.com, or you can go to my paid site, and that's jubakam.com, which has got 6 portfolios instead of 3, and that's actually got the portfolio which has the bank ETFs in it. So thanks for watching. You'll find links to all that stuff down below.